Hi, Dave Wilkins, Wolverine Business Solutions, where we transform your accounting into a strategic system and partner with you in using it to find and make more money. In this episode, I want to give you a practical example of how the business drivers that we've talked about in the previous episodes can actually be used, particularly in the area of forecasting and modeling revenues, and using the revenue drivers to understand how you can change the revenue drivers to understand what the impact is going to be on your revenues. This example that I built using this revenue driver modeling tool consists of products and services. You may just be a product company or a service company or both. Groups of products, groups of services, and it may be individual products if you have less than 10 products or services. But if you have more than 10, and if you can find that the products kind of cluster around certain price ranges, if you will, then you can structure them as a group. And we'll just take that concept today. So for say our group 1, the average price of the group is $50, $150 for group 2, $250, group 3, $400, group 4, and then the quantity of the product or the product group that was purchased in this particular period, 100 for group 1, 75, group 2, 125 for group 3, and 50 group 4. You can see it's resulted in this projection would be 67,500 in terms of the revenues for that particular combination. And then the customers, the number of customers that made up these purchases, make it 100, keep it simple. So you can see that the average customer purchased $675 worth of product in this period. Now, the period can be a day, week, month, quarter, year, whatever time frame you'd like it to be. We'd also say that at this point we have 100 total customers to match these two numbers. So you can see so far these numbers are going to match because for revenues for the products as well as total revenue for the business for that particular period. If you also sell services, we have say 250 is our first category of service, 500 our second, 1,000 our third, and 1,500 is our fourth. We've got 25 service type 1s that were purchased, 50 type 2s, 40 type 3s, and 25. So you can see we ended up over almost $109,000 worth of services, and these were made up of 40 customers. Now, these 40 customers some subset of these 40 customers, or maybe all of the 40 customers, also bought product. So the total number of customers that you of unique customers that you had cannot exceed 140 customers. That would assume that none of the customers that purchased services purchased any product. And if every customer purchased services also purchased products, then that number would be at 100. And so let's just say that we had a situation where we've got 120 net customers. So it says that 20 customers did not purchase any product. So you can see now that our total revenue is $176,250. The net revenue per customer was $1,470 roughly. So you can see what the average amount each customer purchased, whether product or service, which ultimately shows up, reflects here. If we make a change, and let's say, for example, we add a new product, because we're seeing that maybe we can anticipate we're going to have problems with product 3 in the next period. Maybe there's a change, it's going obsolete, whatever it happens to be. But we're anticipating that the new pricing of that is going to be $300, that we'll probably get 100 customers or purchases for that. This is going to drop off significantly to maybe, say, 10, only because, again, there's just whatever's left over. So you can see now that there was a change and our total amount of revenue went up, and you can see what the net purchase price would be. And assuming that there was also a change, let's say, in the total number of customers. So you can see how the numbers, you can play with the numbers, if you will, to get a sense for what kind of an impact changes in your business are going to have on your revenues. It's also interesting to note how you can see how the revenue mix, in terms of the purchase mix, as it were, it varied, and how it can change as you change the numbers. So if this 25 went to, say, 50, so you can see now all of a sudden it becomes a much more significant contributor to your overall revenue. So you'd really want to focus on ways, how do you grow that? I believe this tool can be an incredibly useful way for you to understand the impact of managing your business drivers as a way to really effectively grow your business. I'd love to offer you this tool, no charge. All you have to do is click on the link below, and that will take you to our site, to where you can download the tool. If you have any questions about the tool, please feel free to reach out to us using the contact link below to schedule a call to learn more about Wolverine Business Solutions and how we can help you improve financial performance, accelerate growth, and build lasting value. Also, click on the link below to schedule a call. And if you have any ideas or questions for future topics, love to hear your comments as well. Thanks.